And we are recording. Hello, everyone. Today we're going to break down the footprint chart on TradingView. Okay, so just a little disclaimer. This is my first YouTube video. Um, I also don't have the best mic as of right now, so bear with me. I just wanted to start creating some educational content on how I trade, and I do want to help other people who, were in my shoes 8 years ago. And trading has such a big learning curve. And my goal is to just shorten the learning curve and help as many people out as I can. So hopefully you find value in this video. If you do like the video, find value in it, please like it. I would love your feedback in the comments. So if there's any other topics you want me to discuss, I will be starting out with the topics that I find valuable because it is the way I trade, and I'm going to start off basically nitpicking the small little things that I think are of value to new traders, of something that I wish that I knew when I was starting off. So there's a bunch of knowledge out there, and I just wanted to contribute to it because I also believe that there is a lot of knowledge and videos out there that kind of just circle around the same topics. They kind of recycle the same amount of information and kind of just put their own little twist on it or say it differently. So my videos will be specifically more technical. If I don't explain things as well, just let me know in the comments. So yeah, um, again, would appreciate the feedback. So let me know what works for you, and maybe I can tailor it in the next video. Okay, so for today's topic, we will be talking about the footprint charts. Now, what is a footprint chart? Right, the definition of a footprint chart is going to be a candlestick chart that is going to show not just the price movements, but it's also going to show the actual trading activity that happens inside each candle. And so if you think about it, it's like taking a standard candlestick chart that I have on the left, and we're basically going to take a magnifying glass and understand what's going on within that candle. You have very limited information when it comes to candlestick charts. You have your open, your close, your high, your low, right? So that's really all you can see. And you see the movements up and down in real time. Now, on the right hand side of the chart, I'm going to move this out of the way so we have more room. Now, on the right hand, the on the right, the chart on the right, sorry, the chart on the right is going to be, like I said, the magnifying glass that we are going to put on the candlestick. So if I could just draw a quick circle here, this right here is the wick. That's all you can see on a candlestick chart. Now on the right side, as you can see, it's very zoomed in, and for a reason, right? You're able to set, now I'm not going to go over my settings. TradingView, sorry, a little side tangent, but TradingView has a phenomenal video that they put out explaining how to even add this chart on your chart and how to play around with the settings. Now, at the end of the video, I will just briefly go over my settings. And if you have any other questions, again, feel free to ask me in the comments. But for now, this is what I have. Okay, back to the meat of the lesson. Okay, so on the right, we have a magnifying glass of this wick. Now, I'm going to utilize a whiteboard. Okay, I put this here just so I can draw on it and have some notes. Again, I'm writing using where's the white color? There's no white? Anyways, okay, I'll use gold. Okay, on the left side, we're going to have the bids, right? This is your bid. This is your ask. So if you don't know, the bid and ask is basically the market buyers and sellers, right? So on the left side, the bids are going to be your, I'm going to shortcut this, market sells. Oh, oh, that actually doesn't look too bad. Left side is going to be the market sells. Right side, get buy. Oh, okay. Hopefully you can see that. Market market sells on the left, market buys on the right. Now, there is a very strong nuance to this, and it does kind of complicate things conceptually, but don't think too much of it. I'm just going to mention it. The left side also encompasses limit, limit buys. Now you're probably wondering, well, how does it do sells and buys at the same side? I can sit here and explain to you for hours, but I feel like that's for another video. Um, at the moment, you don't really need to know this information quite yet. So just focus on the market orders for now, okay? So on this side, opposite, I'm just going to shortcut it. LMT limit. Oh, I was about to put buys. It limits sells. Oh, limit sells. Okay. Now, what else do we have on this chart? You have the total volume of the market sells on the bid right here at the bottom. Total people who have sold 17,000, right? 17.66K. On the right, you have 16.62K. Now, the delta is going to take this and subtract it by this. And so you get a delta, which means the difference, right? The total difference of the sellers minus the buyers, and you're going to get a total. Now that total is, how do you say it, the end result of the candle, right? So in real time, depending on your time frame, whatever candle you're using, this will change. But because this candle has closed, right, we have moved on to the next candle. This is what it closed at, and the delta is negative 1,004 contracts. This tells me that there were more sellers, right? Because it's negative 1K, that means that I put this, there were more sellers than there were buyers, right? More sellers than there were buyers. If this was a positive number, and I'll show you in the charts a little later, you'll see the opposite, right? So that means the buyers are outweighing the sellers in this candle. And then you have a total volume traded. So this 15-minute contract, sorry, this 15-minute candle that we have here has a total of 34,000 contracts traded. Now, another tidbit that you don't really need to know to trade it, but I'm going to tell you anyways, just so that you have the education for it. I mean, and the knowledge for it. When they talk about a bid-ask spread, right? The institutions make money in the middle, right? They make money making transactions, selling to, right? Selling to the buyers and selling to the sellers. They basically facilitate that trade across, right? They facilitate, and then the institutions, or not institutions, but the clearing firms make money on that spread. Now, how do they make a spread? So this is something very interesting. Like I said, you don't need to know this to trade, but it is still something to know. The way they make money on a spread is the bid and ask spread is actually calculated in a diagonal manner from left to right, moving upwards one tick, or yeah, one tick, because you can change your settings in your chart, um, but it is technically the bid ask is going to depend on the different levels of liquidity. That's why sometimes you have a very liquid market like ES futures, which is S&P 500 futures. Liquidity is very available. And so you're going to have a tighter spread. Now on NQ, the order book is a bit more thin, which means there's not as much liquidity. Your spread might be a little more wide, and getting certain fills and marketing into the market, depending on buying and selling, might not give you the best price, right? So just understand that. Okay, let's see. I'm going to create a new page just in case I need to do something else. Okay, so we covered bid, we covered ask, we covered the components as like delta, total volume. Next, we're going to move into more of an analytical sense, into an analytical tool, but within the candlestick. So now we're still within the same candle, but now we're going to move into something a little bit more complicated. I'm sure a lot of you know what a volume profile is. If you don't know, I can make another video on it, and I probably will. But again, there are also a lot of other videos on YouTube that you could search up. So the volume, no, sorry, it's not volume profile. I'm taking the aspects of a volume profile and then we are applying it to the candlestick chart, right? So on a candlestick chart, you actually have, hold on, give me 1 second. I am going to paste this here because it's easier to draw on. Nice. Shout out to Canva. Okay, and we're good. We're going to stick with gold. Okay. As you can see here in the middle of the chart, we have, oh, that is not what I wanted. There you go. We have this special colored level here, which is in my case, I set it to gold right there. Okay. Now this level is the POC, right? And I'm going to change the color here. It is let's go purple. I like blue. It's POC. Oh, that is not a C. That was a C. That was not a O. POC. Okay. POC. This stands for the point of control. Point of, oh gosh, what's with my O's? Control. Point of control. Now, if you don't know what this is, quick definition of a point of control is the highest amount of volume traded within that set of data, right? Now, volume profile, you're either using a specific day or whatever. I'll show you a day POC, and then that basically takes in the whole day, all the volume traded, and it's going to give you a certain level in which that has the most volume traded for that specific amount of time that you were analyzing. Now, in this case, we are only analyzing a 15-minute candle, and so that this POC that is shown here in the gold is the level in which there were the most volume traded, right? So it kind of gives you a sense where transactions are being made, right? So let's move back to this. I'm going to shrink it down just a little bit. Yeah, it's really hard to see because depending on the candle you have, there's a lot of data to be seen. Okay, I'm gonna move it up a little bit. Okay, so as you can see, there's a lot of data that's happening within this candle, but I'm gonna zoom out on this candle on the left. Like this is just a small little tiny section of what actually happened throughout the day. So this is a very specific type of analysis and order flow where you are able to make better entries and exits and more accurate um, more accurate analysis in terms of where you want to get out or what's happening. So going back, the POC, as you can see here, is highlighted in the is noted by the yellow. This is where the most volume has been traded. I'm going to move up to a different candle, right? And just kind of show you around. Now the POC of this candle is towards the bottom. Now, we do have the value area high, value area low. To be honest, I don't really use this in my trading, and I will go over, once I go over the basics, I will actually show you how to implement this in your actual trading and how I implement this in my trading. So it's just there, just for my purposes to see it. But what I focus on is the POC. Now, let me see if there's anything else. Oh, okay. One more thing before we actually move on to how to use it. I'm going to get rid of this. This chart, you're able to add imbalances, and that's depending on the settings that you choose. You will see on the left-hand side, a red bar right here that is noting a sell imbalance. On the right-hand side, you're going to see a green bar noting a buy imbalance. Now, what that means, really quick, I'll just go over it. My imbalance setting is at 600%, so that means that if for a buy imbalance, there were 6 times the amount of buys relative to the sells. And look, how I said a bid and ask spread is evaluated on a diagonal basis. It's not evaluated, it's not evaluated to the across 32 contracts traded, right? We're looking at the 6. So it's basically 6 and 82. Now 82 is way more than 6 times your 6 times the setting. So it's going to note this as a buy imbalance. Now a sell imbalance, same thing, but opposite, right? 29 sells, 3 buys. Now, because it's at a diagonal, we are looking at the diagonal here. 29 is more than 3 times, or sorry, 6 times the 3 contracts that have been traded. Okay, there's that. Now, another feature of this chart, you're able to show a representation, a visual representation of multiple imbalances stacked back to back to back. Now in my case, my setting is stacked levels right here at 5. So if there are 5 or more stacked imbalances clustered together, it's going to create this sort of, how do you even say this? This sort of area that extends to the right, whether green for buys and red for sells over here, right? So stacked imbalances on the left, it created a how do you say this? Like a lasting area until it is touched. Once it is touched, it disappears, right? So this candle came up, we tested that area, and then it disappeared and it disappeared until later on we touched all of it and it's gone. Now, something to note during a buy and sell imbalance, this kind of gets into the nuance um, of how trades are made, right? So to not get into the nitty-gritty of it, really quick, when you have a buy imbalance, it creates leftover liquidity. And leftover liquidity means that potentially not all the orders that were executed in this area have been filled. And same thing with same thing with sells, right? Now, I don't know if I could talk about this in this video or else it's going to go on for a long time, but price likes to move towards liquidity. And when we move towards liquidity, transactions are able to be made. Now, when you have a sell imbalance like we have here, you see that we actually try to retest it, and look what happened. Part of the liquidity disappeared. So now it, I think about it like the buyers ate up this liquidity. Buyers took it back up and ate up a bit more liquidity. Now here, buyers pushed it all the way up and then was able to take out all the resting liquidity from this specific sell imbalance, right? So because this is a sell imbalance at the highs, there are probably sell orders here that were left, right? And this is kind of a good, that's why I like the footprint chart, because it creates a very visual representation. I'm a very visual person. So this helps me see what I need to see that I wouldn't get when I'm trading a normal candlestick chart. So as you can see here, the buyers ate up the sell liquidity that was here. Because what happened here? Sellers took this down, right? And weren't able to take it down even lower. So the buyers, this is a big range right here. As you can see, there's a lot of numbers. These sellers that caused this candle to move down, these are market orders, right? So these people are slamming the market sells, slamming the market sells, slamming the market sells to go down. And look at this candle. We actually came down pretty heavy. Now, once liquidity is taken up, that is where you can decide or even analyze using other tools whether or not to make a trade, because the point of traders is to follow who is winning the battle. Okay, so we went over the imbalances, the stacked imbalances. I feel like this video is going to go on for quite a long time. Okay, now let's get into some applications for this footprint chart. I want to have you leave with some actionable tips on how to use it in your trading without going into too much detail. Like I said, there's a lot of other videos out there on YouTube that you could look at. But for now, this is how I use it. Just a disclaimer. Again, this is not financial advice. Do not use my strategy. I'm not telling you to use it. If you choose to use it and you lose money, that is on you. So I'm not a financial advisor. This is only for educational purposes only. You know the drill. Okay. We are going to focus on the POC, right? The POC of a candle. Now the POC of a candle, again, is the area where the highest amount of contracts were traded. And we are going to only focus on the POC in an area of interest, right? There are so many candles everywhere. You're going to get analysis paralysis. Don't even worry about that, right? This is where I said your accuracy gets a little bit better and how this can contribute to better entries and exits. So my area of interest, right? We came, this is the morning drop right here. And this is the first candle that actually showed reversal potential, right? We don't know um, if it's going to continue, if it's going to drop or whatnot. So this is the first area of interest that we have in the morning. And then now we are going to also look at what I have here. And these are just support and resistance lines that I've drawn for my own analysis. And what's happening? We are moving into a cluster of support. Now, moving into a cluster of support, now I've just added two elements to this trading, right? Because trading is all about finding an edge, and finding an edge means how can I stack multiple factors that will give me the best probability for a trade. Now, I'm going to mark this down as my area of interest just so it's easy to see visually. Okay. Oh, that's actually kind of big for the footprint chart. Okay. There's my area of interest. I'm going to call this my candle of interest. Candle of interest right here. Boom. Now, during my candle of interest, I want to see specific things that are happening. I will make a new chart so I can show you. Let me think. I'm going to use this for some notes. This is going to be a longer video, so I do apologize. I hope you're still with me. I promise you this is worth the investment of your time. And again, thank you for um, bearing with me here. Okay, let me take this whole candle and I'm going to put this on my whiteboard right here. Oh shoot, there you go. Okay, this is the fun stuff. This is where you can make some money. That's what everyone wants, right? Okay, now criteria for this, right? Oh shoot, that is not what I wanted. Okay, criteria number 1. That's not a D, that's a 1. Area of interest. I'm gonna shortcut this. Area of interest. Area of interest. AOI. Right? Boom. Yes, area of interest. This is our potential reversal candle. This is the first green candle, first positive candle after the morning sell-off. We are also coming into a cluster of support levels that I have drawn, right? It could be clusters of cluster of supports that you've drawn in your chart, depending on your analysis. Next, area of interest is checked. Next, we are going to look at the POC. POC, very important. Where is the POC? Right? And this is kind of a two-part step. Now you are going to look at the close of the candle. Now this depends on what time frame you're using. I'm using a 15-minute time frame. In my opinion, I believe that is the best short-term type of time frame to do analysis on. I think anything less than that starts to become a bit more chaotic and has a lot more noise to kind of just mess things up. So in my opinion, don't go anything less than a 15 if you're going to do these type of analysis. I have not tested this on a higher time frame, so I'm just going to show you what I have observed from my trading. Okay, so 15 minutes. You're going to wait for the close, right? You're going to watch the POC, wait for the close. Watch the POC, wait for the close. Area of interest. Now, where is the POC relative to the close, right? These are kind of connected to each other in the step. POC is right here. POC. And the close, this is a green candle, so the close is right up here. This is the close. I'm just going to put C for close, okay? The close is above, up arrow, okay, is above the POC, meaning that we had a bunch of volume traded here. This is where most of the volume was traded, right? But we closed way above it. Now, what does that tell me? Because this has the highest amount of volume traded here, that means there's a lot of sellers, there's a lot of buyers, there's a lot of sellers, there's a lot of everybody, right? Because a trade is meant to have a transaction between both sides. We had I'm going to use a different color here just to show. We had an impulse down and a potential for a reversal, right? As you can see here, potential for a reversal. If we were to reverse right here, you have buyers, you have the sellers and the buyers fighting for their life, right? Oh, that is not a L. You got the sellers here and the buyers doing two different things, right? Sellers are trying to take this lower, buyers are trying to take this higher. This is where they're fighting. And this is the battle that you do not want to be a part of because that is where you will get stopped out. That is where volatility happens. Stay out of the way. Like I said, you're going to focus on waiting for the close. Once you find the close, where is it relative to the POC? If the, I'm trying to write, let's go POC. If the POC, oh, sorry. If the close is greater than the POC, that is not a P. POC. If the close, that's actually really ugly. Sorry, my OCD's, there. That feels much better. If the close is greater, oh my God. If the close is greater than the POC, this is going to give me a sign, right? This is not a trade signal. Not a trade signal. I want to emphasize that point. This is not a trade signal. It's just a sign. It's like a red flag or a green flag, whatever you want to call it. This is bullish. Bullish. Now, if the close is less than the POC, which means that it is below the POC, this is going to give me a bias of bearishness. Bearish. And that makes sense, right? Because the close is basically who won the battle. Did the sellers win the battle or did the buyers win the battle? And in this specific candle, in this specific area of interest, the buyers won the battle. And the battle was down here. Oops. Okay. So just know that. Now, knowing this, we have criteria 1, area of interest, criteria 2, POC to close relativity, right? What's going on? So bullish, right? Oh, that's cool. Bullish. So now what? Now, I'm going to put a little asterisk on number 3 because this part only adds confluence to this specific strategy. Now, I've seen things happen where it doesn't necessarily need to happen, but it actually, I feel, just helps it. Now, this is what's going to be called an absorption. Oh man, I can't spell absorption. Okay, absorption. Now, who is getting absorbed? As of right now, we know what happened. It's easy to say, oh, the sellers got absorbed. Easy to say, right? Hindsight is always 20/20. But in this scenario, we can look down here at the bottom. Now you can't really see here, so I'm gonna move back to this. I'm gonna zoom in right here. This is the bottom of the candle, okay? Same candle. The delta is a negative 1,004 contracts traded. Negative. What does a negative delta mean? It means that there were more sellers than there were more buyers. But question, if there were more sellers in this specific candle based on the numbers, why is the candle ending up green? why are we closing above the POC, right? It's because the sellers were the ones getting absorbed, right? Yeah, I'm just going to put ABS, absorbed by the buyers, okay? The sellers kept trying, they kept pushing, they kept slamming the market sell button. But what's happening? They're getting absorbed. Their orders are getting eaten up by some person or some fund or some bank out there that is putting out limit buy orders potentially, or limit sell and or market buy orders, because data shows here that they won the battle, but not really. The result isn't there. So this shows effort versus result, right? So again, what does this tell me? Right? So delta is represented in a triangle in physics and in math, so I'm gonna use that. Okay. So absorption, you're gonna look at the delta, which is at the bottom of the candle. And in this case, we had a sort of a divergence, right? You had the data telling you one thing, but the result telling you another. Sellers got absorbed. So because of this, what does this tell me? What does this tell me? It gives me a green flag of bullishness. So just to review, we have a area of interest, potential reversal, right? We don't know. Next level of confluence, we have the close versus the POC. Again, because of what we see here, bullishness. Third confluence that we're going to add on, we see an absorption of the sellers, a negative delta, but a positive candle, right? The close is above the open. Opens are here. Oh, the close is above the open. It's going to be a green candle. I have my candle blue, but you know what I mean. So what does that give me? It gives me bullish. So now we have area of interest, potential reversal. We have bullishness here. We have bullishness here. Now, knowing this, do I enter a trade? Do I enter the trade right at the top? No. Do not enter a trade at the close because of what we just, oh my God, because of what we just went over. Yes, all the signs as of right now using the footprint chart are telling me that this is a bullish move, but it is not a signal to get in because I just want to let you know volatility has been crazy. Look at this. That is a 69. Who did that? 69. Actually, no, it's not. Oh, whatever. 69. We'll stick with 69. It is a 69 point range in which you would have your stop placed. That is a no-no unless you are a big dog with infinite risk. You would place your stop here. Now, if this were a smaller candle, beautiful. If the close was like, closer to this, take the trade. Or don't take the trade. I can't tell you what to do, okay? Stop loss would be right at the below. Stop loss would be below this candle. Now, that is too much risk to take on. Don't do it. Again, not a financial advisor, but don't be stupid. Now, question is, where can I get in? How do I get in? There are multiple factors. Now, this is kind of where it becomes an art, and you have to kind of fit it within your trading. Now, this is 69 points, as I've said. If you normally trade one NQ contract, you could maybe take some micros, right? There are multiple ways to do this. Just because I say you can't do it, just because I say don't do it, doesn't mean you can't figure out a way to do it. And if you can figure out a way, then, you do you. As for me and the way I trade, this is too much risk. Now, the point that I want to make is going to be on the next candle. Oof, okay, this is not going to work. The next candle right here. And we're going to, I'm going to take this out. It's making me distracted. Oh gosh. This is no editing in this video, okay? Just letting you know that. This is all real time. Next candle. This is the next 15-minute candle. Now I'm going to show you something cool that happens with bid and ask. Focus on the very last area of the bid and ask here, the very last level. I'm going to screenshot this for you so we can talk about it. Again, thank you for staying. If you are still here, if you're not, please come back. Just kidding. It's a video. You can watch it as many times as you want. Skip around. Like and subscribe. Okay. Gets interesting again. What do we have here? I'm going to focus on the very last level here, right? Like I said, bid and ask is diagonally evaluated, but in this specific type of analysis that I'm about to show you, you are going to only focus on a lateral move, right? Left to right. So in this case, we have a 12 and a 0. So at this specific level, it means that there were 12 sells, 0 buys. Now, what I'm about to show you, happens at very specific points on a candle. Do not do this within the candle, right? Do not look at this within the candle. What you're going to look at is the very top and the very bottom. Now, this is the topic of a finished, F-I-N-I, finished, oh, finished auction. Oh, okay, a finished auction. I'm assuming you're going to know what an auction is, and we're not going to talk about that, but a finished auction is only going to be evaluated at the extremes. And what does this mean? It means that the buyers and sellers have ended their little battle with each other. A finished auction means that whatever they're selling, whatever they're buying, it's over. For now, it's over. And depending on if you're at the top or the bottom, we're going to look for these finish auctions because it adds, again, a little bit of confluence to our trade. All right, and it kind of gives you another little hint about what's going on. Now, in this specific scenario, in the screenshot, we are looking at the bottom of the wick. Now, in the bottom of a wick, a finish auction is going to be this 12 and 0. Now, at the bottom, actually, let me make it cleaner looking. Oh, that is not a square. Okay. Okay. When you are looking at a finished auction at the top, right? So now you're like evaluating, is this a potential top? Are we potentially going to be reversing? What are the things that I can look at and what can I see in the data being presented to me that is showing me that this is a potential reversal at the top? Now, when you view a top finished auction, the 0 should be on the left side. So, right, it should be a 0. And I'm going to use the same numbers just so for consistency. 12. 0 and 12. And this is a lateral move, right? The same level. Do not go diagonally up. This is the same level, side to side. 0 and 12. So at the top of a wick, this is what you want to see. You want to see the 0 on the left side. Opposite of that, a finished auction at the bottom, you want to see a 0 on the right side. Now, just to quickly go over why this is how it is. I'm trying to figure out a way to do this without complicating things. The reason why the 0 is on the right side, right, is because, like I said, it's evaluated. Now, okay, now we're going back. We're evaluating the bid and ask spread diagonally, how it should be. What is the diagonal of the 0? There's nothing here. The 12 is the last number. There's nothing here. So the 0, you're evaluating a 0. You're evaluating the buys, but there's no sellers to even facilitate this trade. Meaning that the auction is finished. The auction down is finished. Meaning that there are no more sellers to facilitate this trade for the buyers, right? Like they basically ate up all the liquidity and they're like, well, we don't want to go any lower, right? So they pretty much gave up. And that's why this can be a reversal signal. But like I said, this is not a trigger. This is not a sell trigger or buy trigger. This just adds confluence to your analysis. Now, knowing this, because it's at the bottom, we have a finished auction. We're going to go back to our criteria. Again, this is number 4. I'm going to put another star here because this is just another level of confluence you can add to your trade, right? So I'm just going to put FA for finished auction, okay, because we're lazy. Finished auction, okay? This finished auction is giving us what? A potential bullish signal, right? And because we have the other 3 factors here telling us that this could be a reversal, it is bullish, signs of bullishness. This, in my opinion, is a good place to now potentially look for a trade. Now, if I were to go back, this is the next candle over, right? I'm going to go back to our trigger candle. Our trigger candle, look at the bottom. Our bottom, basically our bottom wick, the last trades that were sent here is 8 and 18. This means that it is an unfinished auction. There are still orders, there's still liquidity down there that's still orders, like sell orders that are still maybe resting down there or whatever. The auction is not finished. Now you potentially you even can assume that we would go down there and retest this level, and sometimes that happens, sometimes that doesn't. But in this case, we could not go any lower, right? The sellers pretty much gave up right here. Auction is finished. Now in this case, to even see this, you would have already formed a wick. Just, just it's hard to see it real time because I don't have that data to show you in real time. We're seeing it after the fact, so data is already set. This wick most likely had already been formed. I see this right here. What I could do, this is not trading advice, this is educational purposes only. Where is my position? We broke we broke above this candle here, making a new high. Oh man. Okay, that is very zoomed in. Okay, we're gonna have to go on the left side of the chart here. Now I have a place to put my stop. You have multiple choices here. You can put it below the finished auction, or if you want to do some micros and you want to extend your risk, that is all on you. You could put it a little past the point of control happening here. Now, the reason why I say the second option is because in the past, I'll do another video on this because I want to focus on this order flow stuff. I think this is very, very important to fine tuning your entries and exits. So we'll make another video on that in the future. But for now, the reason why I say the second option of having a stop past this point of control is because I've seen price move down back into the POC, use this area for liquidity to move higher. Now, question is, we didn't get down to the POC. What does it mean that it happened all the way up here? What does that tell me? That tells me how strong the buyers are, because, or even how weak the sellers might be. The sellers didn't even make it to the POC to facilitate their trades or even continue their fight, right? They gave up early. And if they gave up early, what does that mean? Potential for the opposite to take over and take good control of what's happening. Now, I'm not going to tell you exactly where to get out here if we were to facilitate this trade. Let's, for example, take a trade and we're going to choose option 1 and putting the stop loss here at the bottom of the finish auction. Now, we're in a long in this entry right here, right above the break of this candle. You know what? I'm even going to say that I got in late. I'm going to say I got in late and I put it here, right? Just slightly above. Like we see it pushing, I'm in. Risk is managed. Now, where do we get out? Now, here is where you are going to have to add in your set of criteria and your rules. But for me, personally, I either want to take profits at my next level, and in that case, my next level that I drew is going to be up here at 23,638. I'm just going to say the last three numbers, so 638 on NQ. Now, oh shoot, I didn't mean to do that. I'm going to make this bigger just so you can see the numbers here. This is about a 3R trade, risking 1R, going to make 3R, right? And that is my first level, right? Next level would be my next level up, and this is a 5R trade. Now, let's look what happened throughout the day, right? We're going to move right and see what happened. I'm going to extend this. Oh my God. I'm going to extend this throughout the day. And we hit profit target here. You know, side note, I just love it when I see people doing videos of like a replay and then they set their profit and their stop loss and their profit target and then they let the trade go and they're like, look, it hit my target. I'm like, well, you could have just picked that area. Now I understand you can just pick this area too, right? It's kind of funny because sometimes strategies are kind of very basic and it's like there's no substance to it, and that's just my opinion. But here we are. Find out for yourself, I guess, right? We hit our profit target here. never got stopped out. So boom, 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 right? I don't know the average of this, but you made about a 3-hour and then a 5-hour trade. Now, this is for another topic, another video, another time, not this one, but really quick. You would have had to sit through, I don't even know how long. You would have had to sit through 3 hours and 45 minutes through chop. But I don't know how you trade. I don't know what stage you are as a trader. Please do not sit in front of your screen staring at this price action. Set your stops, pick your trades, pick your areas of interest, add your levels, your different layers of confluence, set your trades, set your stops, and then go do something else. Go make coffee, go spend time with your family, go to the bathroom, clean your room. I don't know what you need to do, but please don't sit for 3 hours staring at the screen trying to figure out, oh, is this going to go up? Is this going to go down? Okay, I'm done venting, but for now, I'm going to end the video there. Again, thank you for bearing with me for this longer ended video. This is my first video on YouTube. Um, it is a work in progress. I'm a work in progress. I'm not used to talking and teaching this. I kind of just say things. I need to figure out a way to be more, I guess, structured, um, especially on YouTube. So if you made it this far, I really appreciate you staying. If you have any questions, just comment it down in the comment section. I will answer you. Within a few hours. I always look at the comments. Or I plan on always looking at the comments to respond to you. If you find any value in this video, please like, please subscribe, and I will see you in the next video. Thank you.